Let's understand what is letter of credit. Let's look at the transaction. There is a seller and a buyer. Seller is selling goods to the buyer and buyer is making payment to the seller immediately, and there is no complication in this transaction. It's a normal transaction. But just think of a transaction where the buyer and seller are in different geographies or say in different countries and they do not know much about each other. But this buyer wants to purchase goods on credit and seller also wants to sell on credit, but seller does not know this buyer thoroughly, and because of that he lacks faith. But seller says, if you can give me some kind of a comfort or security, I'm ready to sell goods on credit. So what the buyer will do, the buyer will approach his bank where he is having his working capital loan facilities, and he will explain the situation that there is a seller who is ready to sell goods on credit, but he needs some kind of a comfort. So what this bank will do, after assessing the position of the buyer, that is bank's customer, this bank will send a letter called letter of credit, and in that letter bank will say, seller, you can sell goods on credit to this buyer who is our customer and we know his financial standing, and we assure you that he will make payment to you on the due date, and in case if he is not making payment on the due date, worry not, you come and ask us, we will pay you provided you guys agree on all conditions. That is, you guys agree on conditions and you comply with conditions. That is, for buying goods, buyer will place certain conditions, and only when seller comply with all conditions, as a banker we will honor it. Okay, so that will be mentioned in the letter of credit by the buyer's bank to the seller's bank. Now seller has got a big comfort because there is a assurance from the bank that buyer will make payment on the due date, and even if buyer does not pay, anyhow he is going to get the money from that bank provided he is complying with all conditions mentioned in letter of credit, that is LC. So on the strength of this letter of credit, seller is going to sell goods to buyer on credit basis, and it is the duty of the buyer to make payment on the due date to the seller. But what will happen if buyer does not pay on the due date? Simple. Seller will ask the bank to make payment which has issued letter of credit, and this scenario will be called as devolvement of LC, devolvement of letter of credit. If all conditions stipulated in letter of credit are complied by the seller, then the bank which had issued LC has no room to escape. They have to make payment to the seller. Of course, eventually they can collect it from the buyer, but they got to make the payment to the seller. So this mechanism is nothing but LC mechanism, and it promotes trade. It helps various transactions to take place. So this is about LC. And who are the parties generally involved in LC? Number one, the buyer. We call him as applicant. Number two, seller. We call him as beneficiary. Three, the bank of buyer. That is the bank which is issuing LC. So we call it as LC issuing bank. And the LC will not be dispatched simply through post. It will be routed through another bank in seller's place. We call that bank as advising bank. And sometimes seller may be in dominating position, or seller may not believe the LC issued by the issuing bank of the buyer. Seller may stipulate a condition saying that LC got to be confirmed by bank in his location. So another bank may also come into picture. We call that as confirming bank. And it's through these banks this entire LC process revolves. Thanks for watching this video, and I hope you like this lecture. If you wish to learn more on the areas related to this topic, check our comprehensive course. I have shared the details and link in the description below. Click sign up and enroll. I'll see you inside the course.